Kia ora, welcome to Shared Lunch, brought to you by Sharesies with BusinessDesk. My name is Ben Moore. I'm the tech editor at BusinessDesk. We have a great BusinessDesk special for listeners and viewers. You can find out about it at the end of this episode. But before we get started, here's some important information.
Investing involves risk. You might lose the money you start with. We recommend talking to a licensed financial advisor. We also recommend reading product disclosure documents before deciding to invest. Everything you're about to see and hear is current at the time of recording.
Today we're joined by Paul Spain and Peter Griffin. Paul is a futurist and the chief executive of Gorilla Technology, and Peter is one of New Zealand's most experienced science and tech journalists. They're here to talk to us today about artificial intelligence, or AI, and how it relates to ChatGPT, a subject that's got almost everyone either excited or worried as the possibilities and implications seem to change daily. Welcome, Paul and Peter.
Great to be here.
How you doing, Ben?
Before we dive into the details of AI, I think we do need to take a quick look at the Silicon Valley Bank situation. So Silicon Valley Bank was known for supporting the global tech industry, and the collapse was a mixed bag of uncertainty, but also institutional support for the tech industry. And it's still relatively early days, so the level of contagion, if any, is yet to be seen. But I would love to hear from both of you about how you think the tech sector, big and small, could be changed as a result of the collapse of the SVB and other banks.
We saw a massive campaign from Silicon Valley influencers, Sam Altman among them, the founder of OpenAI, to say, look, there will be an extinction level event if you allow these startups in particular to not be able to pay their people. So they mobilized with petitions, with Twitter campaigns. Behind the scenes, I'm sure they were lobbying as well. They're very effective lobbyists in Washington. They have a lot of links into the Biden administration. And they got what they want, which was effectively a bailout. And although taxpayers didn't bail out depositors in Silicon Valley Bank, it was the FDIC, this instrument they've set up, which is funded by the banks. It basically has set a precedent that a lot of these regional and mid-sized banks potentially are going to be bailed out in future. So the whole financial system is looking at the ramifications of that. But for tech, it's obviously great that these companies, a lot of startups, something like 44% of startups actually had money in Silicon Valley Bank. So they've all escaped losing any of their deposits. If they'd gone through the traditional path, which would have been to seize those assets, which the government did, and then auction off that bank, they probably would have taken a haircut of about 10 to 15%. So the likes of Rocket Lab, which had 38 million US deposited there, they might have lost $4 or $5 million, which wouldn't have been great for Rocket Lab. So thumbs up, everyone's really happy about that, but it's what it means for the future, both of the financial system and also for tech, because Silicon Valley Bank was the preferred banker for a lot of those really disruptive companies. And Signature, the other bank that failed, particularly for crypto companies. So they've basically taken off the table three companies that are very friendly to disruptive type companies like crypto and blockchain companies. So where will those guys bank? Because the big banks, the Bank of America, the JP Morgans, are not really interested at the moment in doing a lot of business with crypto exchanges and those sorts of companies settling their transactions, because it's high risk.
Like you say, there's the ramifications for both the financial side and the tech side. But Paul, do you have any kind of view on that, specifically on the tech side, what it might mean?
Look, I mean, I think at this stage, everyone's very fortunate in that, that there hasn't been, any major issues because the government have stepped in. So, I think that increases a lot of confidence. But, stepping back a little bit from that picture, I guess there's going to be a lot of thinking around where the money should be sitting for for a lot of the tech entities, and do you trust putting it in just one bank? Have you got to protect yourself by splitting it across a whole bunch, or really going with maybe the more traditional and larger banks, but they don't necessarily have some of the capabilities and flexibility that we saw from Silicon Valley Bank. But at this stage, it looks like it's kind of back to normal for I think most of the startups and those in the tech sector, like Rocket Lab, as Peter mentioned.
Yeah, and interesting, that idea of normal in the tech sector, which is something that changes almost every day.
True.
Especially in the world of AI, which we're kind of, that's which we're focusing on today. And of course, AI has been around for a really long time in different forms. It's used in social media, in cybersecurity, in graphic design, and I could go on. But for some reason, ChatGPT feels like something new. So, Paul, can you give us a rundown on what ChatGPT is, maybe how you kind of access it, and why does it feel so different?
Yeah, look, ChatGPT, I think, is really exciting because it's very easy for people to access. And I guess for those that have used it, most of us would, in simple terms, think of it as an online robot that you can chat with about anything, right? So you can throw any question at it that you like, and it usually comes back with a pretty good answer because it's tapping into a very large pool of data that it's collated from the web. Now, right now, it's not necessarily accessing the very, very latest data, but it has this incredible information to draw from. It's got an understanding of languages and so on. So you can ask it to write a plan on something, a report, to summarize something that's really long down to something that's very small. You can have it translate something for you, give you a description. You can of something that it sees. So you've got a digital image. It can explain that, and it can write computer code. So there's it is insane the sort of things that you can throw at it and the results that you get back. Now, a couple of examples that I shared last week in Queenstown at the Future Focus event that was put on by the Chamber of Commerce down there. One I picked out being, quite specific, I guess, to business owners in Queenstown. There are a lot of issues there with finding and retaining staff, and that's within, hotels, restaurants, and so on. So I jumped into ChatGPT, imagining myself to be the manager or owner of a restaurant and a bar down there, and I asked ChatGPT, "Can you write me a job advert because I need to hire some more staff?" And it came back with a really credible job advert in a few seconds. It would have taken me a lot longer to write. It was if you'd asked an individual to do it, it's sort of debatable as to who would have come out with a better ad. And then once I got that back, I said, well, actually, can you spin this so it suits a young audience and it's, a bit more fun and entertaining? And it did that, and it did it really well. And I said, well, target an older audience, and it came back with a really good example. And then I thought, well, what would you do next? You've got your job advert. Actually, ChatGPT, can you produce for me the process to employ somebody that I could delegate to somebody else? And so it wrote out an entire process for employing somebody, down to the local publications that you could promote in. I think in one case, it came back with attending different events locally, other places you could go to help get the word out. And it also wrote a really good list of interview questions, right? And I think of all of the hours and hours over the years that as an employer I've put in to develop these sorts of processes, to think up questions, to go around Googling, to do varying learning, and ChatGPT just spits it out in a matter of seconds. It is quite mind-blowing what's possible. And we've also used it for coding. So you get it you put a request to it, write me a script, write me some code to do X, Y, Z. Not always perfect, and so there are those aspects to it, but it's putting out a pretty credible result to the level where what I'm generally encouraging businesses to consider ChatGPT and this type of technology is not just as a business tool as we probably have got used to with technology, but start thinking of this tool as another member of your team.
Yeah, I mean, and it's interesting that it is all the hours that you and others have put into perfecting those questions that's helping ChatGPT produce such amazing results as well.
Yes, there's kind of a scary side to that, isn't there?
Yeah. So Peter, with the ChatGPT like AI being so prevalent and in the zeitgeist at the moment, who are the big tech companies that are kind of jockeying position in that space at the moment?
Well, the thing about AI is it really benefits the companies that have lots of data. So you're looking there at the Googles, the Amazons, the IBMs, and the Microsofts, and particularly Microsoft, I think, is the shining star at the moment. Traditionally seen as a conservative company that serves the business market in particular, has a steady, stable of products like Azure, its cloud platform, as well as its Office suite, makes good recurring revenue on that. But just in literally the space of a couple of months has become a leader in AI as a result of that quite wise in hindsight partnership it's done with OpenAI. It's tipped in up to $10 billion in investment following an initial investment of $1 billion in OpenAI. So it is deeply invested in this. It has an exclusive license to offer the ChatGPT type capabilities via its Azure cloud platform. That's now in beta mode, is being used by customers. It's got Copilot, which is something that will plug into the Office suite to allow you to use those functions within the Office environment. It's got Bing, obviously, and that caused a lot of consternation when some of the answers coming out of Bing's ChatGPT were a little bit funky. Hallucinogenic, I think is the term that computer programmers use. But to its credit, I think Microsoft has said, look, this is early technology. We can change the guardrails, and we have around that aspect of ChatGPT use in Bing. But we're not pulling back from this. We are full steam ahead on this. And I think that's been well received by the market. And it's given Microsoft, I think, a new lease of life, where Google has been a company. Google has DeepMind. Google has thousands of AI researchers. And I think done in a very short period of time. We've got the other players like AWS has a lot of great AI experience. We've got IBM, which has bet the farm on quantum computing and AI. Those are the two things it's doubling down on. But we've seen, IBM has really struggled with Watson to commercialize that in a really serious way. It had to shut down its Watson Health division because it ran into trouble using AI, applying that to medical data. So while there is now an accelerated race of these big tech titans to actually make the most of AI, it's really all in the execution. And there's a lot of hype at the moment. It feels very much like the Web3 sort of explosion of a couple of years ago, where there's all this interest. But that is going to shake out, and it really will come down to how these companies execute.
It's interesting that you kind of brought up quite a bit of the issues as well, especially around hype, because if we look at what happened when both Google and Microsoft released their chat-based search, and there was an immediate reaction in the market. Yep. So why do you think that reaction was so noticeable? And do you think that this is going to be like do you think this is going to be a long-term boom for the tech markets, or do you think that this is going to be another Web3 situation?
We've been talking as tech geeks and pundits and commentators about AI for probably 15 years now. So I've personally been frustrated that AI hasn't hit the mainstream in the way that I've always thought it was capable of. Having been to a lot of these labs, seen what IBM and Google are doing, it's just like, why aren't people talking about this to a greater extent? And it's because, as Paul said, now it is so visible and so easy to use for hundreds of millions of people. That's the difference. So I don't think this is like a Web3 situation again, where there was a lot of hype, particularly around NFTs and digital assets. And we saw billions of dollars in those assets traded. And now the volumes have sunk massively. The value of those assets has sunk massively. I don't think we're going to see a repeat of that. What we're going to see is we'll come out of what Gartner calls the hype cycle, where we've got the overinflated expectations, which everyone has at the moment as they try this and go, oh my God, what's this going to mean for my job? Or can I lay off a few of my people in my business because we can automate some of this? We've got that. We're heading for the trough of disillusionment, which is when we realize this has serious limitations. It's not actually as good as we thought. And we will end up, what Paul said, where we will be working alongside these digital assistants. And that has been the promise of Silicon Valley for nearly 20 years. We are going to give you a digital assistant to take all the mundane stuff out of your work life. And that was the promise with Alexa and Siri and Google Assistant, and they failed to do that, particularly Amazon, which was the early leader in that. They've had to trim back that whole division, that Alexa division, massively because it's costing them billions of dollars. No one is using it to buy things or do things that generate revenue for Amazon. So we're at the next phase of it, which is very much around generative AI, conversational AI. IDC is saying that market is growing at 37% a year. It's going to be a $16 billion market by 2026. Last year, it was $3.3 billion. So all the analyst groups are saying this whole sliver of the AI pie is growing massively. And I think that will equate to adding a lot more value to those companies as long as they can execute. And that's still to be seen.
Yeah, I think it's interesting you brought up the Gartner hype cycle there, because I think it's a really interesting and useful way to think about tech trends as well. So definitely one worth being familiar with. So Paul, we kind of talked a lot about the potential of ChatGPT and dipped a little bit into the concerns, but there is some nervousness about how ChatGPT could negatively impact things, I guess. Maybe in education, there's some concern about our kids are going to not learn how to write or research or construct arguments, and potentially whole professions being lost to AI and ChatGPT. How real do you think these concerns are, and what sort of time frame do you think we're looking at before they start cropping up in the real world?
Look, I think things are going to move, reasonably quickly, because there's a level of this technology that's available now to everyone. We've seen that availability of the technology, I think, just capture probably most people off guard, I think. But realistically, we will see it impacting, and we will see it bring significant change. When you've got a tool that's going to do your writing for you and your research for you and so on, and you can't make it go away, yeah, that is going to change how we operate. But we've been doing this in one form or another with technology, for decades. I remember as a youngster talking to my GP, talking to my doctor, and saying, I struggle to remember everything that's going on. I've got this new gadget here, a Palm Pilot. This was in the 90s. Can I use this to capture all my information? Or is that actually going to make things worse for my brain if I'm using this piece of technology? And he just said, no, go for it. And my thinking has definitely continued down the track with these technologies. Yes, there might be something that we do lose along the way, and we look for ways to do that. But we have to operate in this new world. So schools and universities, every educational institution has to consider these just as part of the mix, in the same way we consider having a search engine and having a word processor and a device with us at just about all the time.
I often say Socrates was terrified of people learning to write because he thought that our memories would all disappear. So it's kind of not a new conversation. So we talked quite a bit about Microsoft and Google and IBM. Peter, do you see any other big tech companies that are really starting to do interesting things with AI in a truly disruptive way, like ChatGPT? Or
yeah, well, it sort of feels a little bit like 2007 when the iPhone came out, and obviously that was a revolution in terms of creating the smartphone format that we're pretty much using today. It led to the slow demise of the likes of Nokia and BlackBerry and Sony Ericsson and Alcatel and Philips as handset makers. But what it did was it led to an explosion in companies that make all the components that go into a smartphone. Chip makers, Bluetooth module makers, battery makers, Gorilla Glass makers. All of these companies suddenly became big players. And I think we're going to see that with AI as well, and it's across the board. And a lot of these players already exist, and they're already doing AI-related things. It's just now that this compound growth is expected to be so great around areas like generative AI they're going to take off. We're talking about infrastructure providers. So AI, and particularly generative AI, to do that in real time takes a lot of computing capacity. So we're going to see a lot of data center infrastructure providers start to do a lot more business potentially. The likes of NVIDIA, which makes chips that go into machines that sit in data centers. We saw, their share price surged on the back of crypto mining because people were using their graphics accelerators to use in crypto mining farms. I think we'll see likewise with that. NVIDIA is already a big player in AI chips. We'll see other players like that, the likes of ARM and AMD, Intel to some extent, and a whole range of new chip startups that will suddenly be potential for doing IPOs. It goes for the application makers. We're seeing the likes of Adobe embracing AI, so building that into their subscription price. The likes of Shutterstock, a big stock image database, is basically saying we're going to trawl our entire database of photos so that you can generate your own photos and imagery based on what we have in our library. That's in contrast to the likes of Getty, which is actually suing a generative AI company because it's saying you're using our copyrighted material to generate creations for people that's not on. So we're going to see companies make philosophical decisions about whether they embrace this technology or not. All sorts of services. The software layer is really where a lot of the value is going to be added here. And if companies can come up with something that improves productivity or efficiency, like Microsoft potentially can with its Copilot service, suddenly you have the potential to raise subscription prices for Office 365. If you put that up $5 a month for a premium tier, drawing on these tools, that's great for investors. So the application layer will be huge. Other areas, cybersecurity. We're already seeing companies like SentinelOne and other listed companies that are getting a bit of a bump in interest now. The automation of securing your networks using AI is a huge one. And then, I think we'll see, the exchange-traded funds, the ETFs, really start to take off. They're small at the moment, the ones that are dedicated to artificial intelligence. We've heard of, Cathie Wood's ARK ETF that's devoted to this. It's mainly got Tesla and NVIDIA, those sorts of companies. But we'll see more ETFs that have the whole range of AI companies included in them so that people can spread their risk within a category like AI. And, it's very US dominated, a lot of the discussion around this at the moment, but we're seeing the Chinese embrace AI in a massive way, and they will go their own way on these platforms because they draw on a different set of data to populate their large language models. But Baidu is about to release its AI equivalent of ChatGPT. The rest of them, Tencent, Alibaba, are going down that path as well. In Abu Dhabi, we've just seen Presight Holdings, a big AI company, list there for they raised $500 million. That was massively oversubscribed. So I think it's a good opportunity for companies outside of the traditional markets for this type of technology to actually put their hand up and say, we've been doing this for a long time. It doesn't need to be US-centric. We can bring our tools to the world as well. And that's an opportunity for New Zealand companies as well.
So it's about thinking broad, not just about, okay, Microsoft has released this tool, but what are all of the ways that these tools are going to need to be supported, and where are the opportunities and the different companies around that I could start to think about?
Yeah, exactly. And the big question for investors is, what are the penny stocks at the moment that are going to become multi-dollar stocks in the future that have the real, valuable stuff? And there are heaps of them I've been looking at out there, and a lot of them in the medtech space. We've got one here, Volpara Health, which is doing a really good job of using AI to scan mammogram images to look for tumors. And, the evidence suggests that, doctors get tired. These sorts of screening programs are prone to human error. So that is an area where they can add real value using AI to improve people's lives. If they can roll that out on a wide scale, that is potentially is going to hit their share price in a really positive way. So it's all of these small companies that have listed using some of these instruments on the NASDAQ that, like Rocket Lab did, using a SPAC, which makes it very easy to list a company. A lot of AI companies have done that. They're sitting with very depressed share prices because of the macroeconomic conditions. They're desperate for a bit more capital. They will all be raising a lot of money. And then we've got a whole layer underneath them of companies that aren't listed yet, that suddenly there may be a bit more venture capital or even prospects of listing because of all of this interest in the entire AI ecosystem, whatever component of it is, infrastructure, application layer, cybersecurity, or fundamental chip making that's going to power this whole revolution.
There's also the there's the aspect of how this impacts from an investing perspective, right? So is there going to be, obviously right now we can go and use ChatGPT and similar tools and ask them to advise our investing, right? And that's just right now. But where that sort of evolves out to, over a period of time, there might be funds, that are completely managed and run, by an AI. There will be, I think, quite a whole gamut of different options. So, I'm imagining, Sharesies and some point in time in the future, where there would be an AI element to that. So, at the moment you can go and pick a fund to invest in. You can go and buy an individual, stock. I imagine the AI piece, would be part of that at some point in the future. And then, of course, the other piece that we have to be thinking about with the investments is of companies that aren't AI companies, how are they going to change and be disrupted by this? So, think of a big company that you know of. How will AI change a company like that? Can they do significantly more with the team they've got? Could they do more even with less people? There's all sorts of possibilities. I'm not sure we've got a head around most of those answers at this point in time, but we have to start postulating and thinking about these changes, because our investments could look very, very different in a few years' time because of the changes that artificial intelligence facilitates.
Yeah, interesting. So it's not just about the potential opportunities in that ecosystem, but also about looking at where the disruption might come in and what that might mean in terms of some of the more established companies.
Who's going to be wiped out? There are companies that have been doing incredible things with AI, but if you and I can actually achieve the same things that they achieve now with an off-the-shelf tool, is that company then still relevant? Mm-hmm. And you certainly hope for those that have been established that they've got in there, they're ahead of the game, and that they can use these tools much better. But there will be some areas where an advantage will disappear as well.
Yeah, good questions to ask at the shareholders meeting maybe. Peter, what are some of the kind of red flags that we should be looking out for when it comes to the potential negative aspects of AI? You talked a little bit before about some ethical concerns, and maybe there are even environmental concerns around just the raw amount of data processing that's needed. What are some things that we need to be thinking about?
Yeah, actually, that environmental aspect is really important. We've seen a lot of companies focus on, particularly listed companies, ESG responsibilities, environmental, social, and governance requirements that they have to report on. So a lot of them are increasingly looking at what they call their Scope 3 emissions, where they have to look through their entire supply chain and go, well, we need to account for that. And even if it's another company that is buying offsets or using renewable energy, we need to report on that. Increasingly, that is going to become the norm. And that has been the reason why a lot of companies have got out of anything related to crypto or crypto mining, any of those proof of stake type blockchain applications that are quite dirty, considered to be quite dirty because they use so much computing power. So we will see a similar thing. If you're a purely AI or heavily draw on AI to analyze content or big sets of data, what are the environmental implications of that? Can you power that stuff using 100% renewable energy? I think the other big thing is just regulation. There's a lot of talk all over the world, particularly in the European Union, around a lack of oversight, a lack of transparency into all of this AI. A lot of lawmakers, politicians are going, hang on a moment, back up the bus. This is all moving too quickly. It's accelerating at a pace we're not comfortable with. And here in New Zealand, we have no oversight. We have no visibility into AI decision-making. It's a black box. It's algorithms that are controlled by companies that we have no idea about the decision-making process. In many cases, we have no ability to query those decisions that were made with AI. We have an AI charter which governs how government departments use AI. It's a voluntary code, and it's very low-key. It doesn't apply, obviously, to the private sector. So insurance companies, health companies, and that is the big danger area. When health companies start using GPT-like technologies to mine their own database of patient records to give them either personalized medicine insights or general trends about how the insurance risk of their customers, for instance. That is a game changer. When you move from not just using AI to automate processes, but to automate decision-making. You take that out of the hands of a bunch of insurance policy analysts and you get an algorithm to do it. That is a game changer in terms of doing away with white-collar jobs, efficiencies in your business, better decision-making, less bias, all of that sort of thing. But it's incredibly risky at the moment because we have no standardized processes. We're basically relying on companies doing the right thing. But fundamentally, overall, AI adoption in New Zealand businesses and in businesses all over the world is very low. So even if we move from I think it's 12% in the S&P 500 companies that are using AI to a great degree at the moment, if that even moves to 20% or 30%, that is a huge amount of potential to improve productivity, which is lagging in our country in particular, to generate new products. And we have to remember that the change is really going to hit white-collar jobs. We always thought that it would be another industrial revolution where all the mechanics and the people on factory lines would be done out of jobs. It's not working out that way. It's going to be knowledge economy jobs that go. So I think it's inherent on all of us to think about our own position and how are we going to live with the digital AI assistants around us, taking some of the functions that we do. How do each of us, and someone as a content creator looking at, am I still going to have a job in 10 years' time because the likes of generative AI is going to be producing content? What am I going to do? How do I upskill to make the best of those tools and still have a decent paying role in 10 years' time?
Yeah, it's going to be interesting when the Shared Lunch podcast is hosted by ChatGPT. Let's end up with just your key piece of advice from each of you about the one thing investors should think about with AI. What would you say, Paul?
Look, I think the first thing is you need to get your feet wet and try out this technology. So if you haven't used ChatGPT yet, then go to chat.openai.com and actually have a look and throw some questions at it, whether it's questions about investing, questions about things that you find hard to do in your work. Just, throw a bunch of things at it and get a feel for just where this technology is at right now.
And I would say, do some research and go a level deeper rather than just the big companies that have dominated the conversation around AI, the likes of Microsoft and Google and OpenAI, which isn't listed at the moment, but we may see an IPO in the next couple of years of that company. Look at all of those companies that are providing the layer underneath the infrastructure, the cybersecurity, the fundamental hardware. They're all going to do quite well out of this AI revolution as well. So picking and choosing who are the emerging players and who are the established players who are going to see their business really take off is, I think, the key to actually investing in this area and backing horses that are going to do well long term.
Fantastic. Thank you both so much for joining us here today and for all of your really in-depth insights and knowledge. We really appreciate it. And
thanks, Ben.
Thank you. It's been a pleasure.
It's been fun. And we have a special offer for Sharesies investors from BusinessDesk. If you use the promo code SharedLunch2023, you'll get $100 off an annual subscription to BusinessDesk, which is usually $249, including GST. The offer only applies to new BusinessDesk subscribers and can only be used once per subscriber and can't be used with any other discounts. Thank you so much for joining us once again, and enjoy the rest of your week.